Hello, everybody. Michael Silva here. So I've been getting asked the question recently very often whether or not now's the time to be buying gold and or gold miners. We've been seeing gold take a little bit of a backseat along with miners due to the back of potentially a rising dollar. So instead of me going over the technical charts, which I typically do, I'm bringing on the CEO of GoldMining Incorporated, Alistair Still. So first and foremost, welcome to the show, Alistair. And if you can, just tell us a little bit about your business background in the gold mining and gold industry.
Absolutely. Firstly, well, thanks for having me on today. Pleasure to be here today, Michael. My background actually has been working primarily for major mining companies, producers, operators such as Newmont and Goldcorp, Kinross, and the likes of those type of companies for almost 25 years until almost 2 years ago when I saw an opportunity to come work for GoldMining Inc, which is a earlier stage project developer and explorer, where we have a very large portfolio of projects throughout the Americas, gold focused, over 32 million gold equivalent ounces, and taking my experience having worked at operations, building projects globally, and also in the corporate M&A fields to a company such as ours with a big portfolio has me pretty excited about our future at the company.
Awesome. Thank you. So let's hop right into the macro, what's been kind of going on. Do you think that this bull market in commodities, which we've been seeing quite a bit of weakness in commodities really across the board, and precious metals, do you think that the bull market is still intact with what's going on with the interest rate hikes? Or do you think that, potentially we might be coming to an end in this bull market?
Well, I think the fundamentals for continued strength in the gold price are all still very solid. Gold, I would say, traditionally has been a store of value. It's been a hedge against inflation. And a lot of the market activity we've been seeing lately is people reacting to high inflation and fears of what that may mean. And traditionally, for millennia, actually, gold has been a store of value, a protection against inflation, a safe haven. So I see that opportunity still exists. I still think there's a runway for the price of gold and precious metals to remain strong, possibly even increase. So I think it's a fantastic time to be certainly diversifying into the precious metals and gold space and making sure there's exposure in one's portfolio.
Absolutely. I'd have to agree, especially in today's current market, watching the NASDAQ and the S&P 500 go into the bear market territory, whereas gold has been holding up rather positive, even on the back of a stronger dollar. But, in the last week or so, we've been seeing a little bit of weakness. So it seems that more people are becoming interested in kind of entering this gold sector. I feel it myself. I'm getting a lot of questions about it. And this is also as people are learning more about inflation and recessionary risks. So inflation, as you mentioned, it does seem to be more of a global problem. So the awareness towards gold can be obviously much more important. Do you think that this can be any type of big awakening for towards fiat currencies?
Well, I think so. And I say the fundamentals for gold are there in terms of its, scarcity, and its demand hasn't changed. The producers have reached peak production several years ago, and they haven't been replacing their reserves. So scarcity of the metal is still there. Demand is still there. And I think one of the challenges that we have been seeing is that the gold equities have been broadly sold off with the general market over the last couple of months. And if you look at fundamental values, the price of gold really has not significantly changed during that same period. In fact, for the last months, it hasn't changed. It's been consistent in that $1,700, $1,800 per ounce range, which is a solid gold price. So I think there's fundamental value there for investors who can see that gold stocks have been broadly sold off. The fundamentals are still there. The miners are producing cash flow. The metal price is still relatively strong. I think it creates a buying opportunity is what it does.
Awesome. How has the mining industry, specifically gold mining, kind of fared in this era of supply chain constraints, bottlenecks, in terms of profits, budgets, and just the overall health of the sector?
Well, as an overall sector, I think the mining industry has become a lot more efficient as operators because they've weathered these type of cycles and storms in the past. And whenever you face a hard time, whatever commodity, whatever product you're producing, that actually turns you into a better producer, a better operator. It makes you force yourself to find efficiencies. And I think the mining industry has shown that time and time again for several years and even several cycles through the mining cycle where they've become better operators. A classic example is how the mining industry fared quite well during the COVID pandemic. The companies were well set up, they had good safety protocols and procedures, and they were able to largely remain unaffected in many industries. So that's positive for the general industry. Our company, as a specific company, we're not an operator at this stage. In fact, we're doing exploration work. So we've had minimal impact from supply chain issues. We've been able to attract people. We've been able to find the supplies we've been looking at. So it really hasn't affected us on supply chain. Like everyone else, we are starting to see some risk of inflation. But again, by having such a strong balance sheet, a strong technical in-house team, we are able to withstand some of those external pressures, and I don't see it as being a real risk for our company.
Awesome. Well, as we're talking about it, let's kind of just pivot in. So you are the CEO of GoldMining Incorporated. It's traded on the New York Stock Exchange under GLDG, and also the TSX, correct, under GOLD, so just gold. The shareholders, you have quite a big list of shareholders that are some big names like Doug Casey, Rick Rule, who I just was recently listening to earlier today on a Spaces on Twitter, Marin Katusa, which is also another big one, and then BlackRock, which is also another big one. So it made you had already mentioned that you had 32 ounces of gold equivalent resources in the ground. So historically, when gold rallies, the stock performs much better than the spot price. And something interesting, I've taken a look at GLDG before and I've correlated it to gold, and you can really see they do have a pretty strong correlation, but the leverage is, one, obviously it increases risk factor, but it does offer quite amazing leverage. So can you talk us a little bit, why that is, and, personally, why you believe the company's most important assets are?
Well, I think you're right. And I think you've emphasized a few good points in your question there. And the first one is that we are highly levered to the price of gold. And it's a very positive thing. And that's really backed by the strength of our asset portfolio. We have over 32 million gold equivalent ounces. That's about half split between 16 million measured and indicated gold equivalent, and another 16 million inferred gold equivalent ounces. They're in 5 countries. They're all in the Americas. Over 80% of that exposure is to gold. We do have a little bit of copper exposure in there, which is a very positive thing as we move towards a greener economy and electric vehicles and the various infrastructures needed to create those. There's over 2 billion pounds of copper in that portfolio, and another 25 million plus ounces of silver as well to round it out. So a good strength of portfolio has us highly levered to the price of gold. And yes, traditionally we have performed well when the price of metal performs. And you mentioned some very large investors, some very important funds. They've seen the value in gold mining and the leverage that we create or we expose investors to the price of gold. I know specifically later this month, Rick Rule has invited us to his Rule Symposium to be a presenter to talk about the investment opportunity. Others are aware of this, and I think a classic metric that people can point to on the leverage side is that we often express value for exploration or resource development companies on an enterprise value per resource ounce basis. And that sounds complicated, but it's really quite simple. It's effectively the market cap of the company, less any cash or balance sheet items. So take our market cap, take off the cash we have on hand, which was approaching $10 million last quarter, take off the value of the gold royalty shares, which we created last year, which is another plus or minus $50 million. That leaves us with an enterprise value, which divided by the 32 million gold equivalent ounces works out to an enterprise value per resource ounce, something like $3 or $4 per ounce. And really that's an unheard of value within our space. Many of our peers with either single assets or a diverse portfolio, not near as diverse or as rich as ours, can trade at $20, $30, $40, even $50 on an enterprise value per resource ounce. So there's a fundamental value gap there. We're trying to daylight, and we continue to show and demonstrate the strength of our portfolio, why that gap should be bridged, and that really creates an exceptional investment opportunity for investors into gold mining. Awesome.
Well, that answers really my next question was about in terms of what separates you from other miners and unlocking value. So if you want to add to that, obviously, please do. But are there some catalysts in 2022 that investors can look forward to? I did recently see that GoldMining Incorporated discovers an extension of, pardon me if I pronounce this incorrectly, the La Garucha target, Lamina project in Colombia. If you want to give us some insight into what's taking place there.
Yeah, no, absolutely. You're absolutely right. And really that's about, the strength that we have is the diverse portfolio, unlocking value from different pieces. And last year we had, a great event where we created Gold Royalty Corp. We unlocked value from the portfolio by spinning that into a new IPO. It raised $90 million. We now have 20 million shares on the balance sheet. And on the strength of that, we're going forward with some other opportunities this year to further daylight value, including, as you mentioned, La Garucha at our Lamina project. And that was a project we announced earlier this year, a preliminary economic assessment on, which showed robust economics, NEV over $300 million on one project alone, had a production profile, could be over 1 million gold equivalent ounces. So very strong economics, but we saw some exploration potential outside of the existing resources on a target that had seen some very limited drilling by a past operator 10 years ago. So we announced the drill program, we started drilling, and the first couple of holes have had tremendous success. We had a recent announcement where we talked about one of the drill holes which intercepted 345 meters at 0.74 gram per ton gold equivalent, which is a very solid grade over an extraordinary width, and has us very excited about expanding the resource at Lamina and specifically on the La Garucha target there.
Awesome. Another project that I found interesting, if you want to give us a little bit more insight to it, is, with the whole rising greenness, green energy popularity here since really 2020, GoldMining owns a uranium project. Can you tell us a little bit more about that uranium project and why it might be important to your overall portfolio?
Well, I'm glad you mentioned the uranium project, which is called our Rhea project. And many people don't know it's in our portfolio. Now, we are very much a gold-focused company, so a little unusual having a uranium project, which was a relic from an earlier transaction. But it's an exceptionally exciting prospect because it is actually a very large land package within the Athabasca Basin, which is one of the highest grade uranium deposit regions on the planet. There are a number of exploration companies very active there. They've been successfully raising money, doing exploration, putting significant market caps together on companies on much smaller land packages. And here we are with a very large land package, 125,000 hectares on this Rhea project, very prospective ground. That seems like a natural fit to put into the hands of someone who's more focused on uranium to unlock further value for our shareholders.
Awesome. You had mentioned gold royalty company. So I kind of want to get a little bit more kind of information why this could be important to investors in the company and then kind of what the essence of the strategy is there. But GoldMining Incorporated owns 20 million shares of a gold royalty company. And that's worth about half the market cap. So can you tell us maybe the strategy there and why that would be important?
Well, the important thing here is that those 20 plus million shares that we have was created really from the portfolio on the strength of the gold mining assets. So we took the gold mining assets last year, we wrote small royalties on them, put that into a new company, brought in a very experienced and seasoned management team with David Garofalo leading that group. It raised over $90 million on the US stock exchange on its IPO, and that created a lot of value for our shareholders. That's a royalty company that's continuing to grow. It's done a number of transformative transactions over the last year, and it's hard to imagine that within 1 year, that's one of the the growing stars and highest growth royalty companies out there, and we own a significant portion of it. So that's the great success story. The importance of that for our shareholders is that we think we have an opportunity to do something similar again with another one of our projects I'd like to mention, which is our Whistler project in Alaska. And really what this creates is the opportunity for a project within the USA to launch and move it forward with a potential IPO to raise funds, focus on a US-based project, which has gold and a significant component of copper. And to do that, we have created a new subsidiary called US GoldMining Inc., which will let us stay US focused. We're tremendously excited about keeping projects onshore, creating American jobs. The state of Alaska is very proactive on development, and particularly in the part of the state where Whistler is located. They've pledged money and are actually spending money now on a feasibility study for an access road to open up what they call their Road to Resources program to encourage development companies to come in and create jobs and unlock value. So we're very excited by our Whistler project. We've brought in a very experienced geologist who's had tremendous success exploring in the north with some great discoveries, especially nearby in Yukon in Canada, across the border from Alaska. He'll come in and lead activities, and that's Tim Smith, who will be focusing on moving our U.S. gold mining subsidiary forward, as we'd like to put that into an IPO similar to a structure that we created value with Gold Royalty last year.
Oh, that's awesome. Before we get into the final question, which I'm just going to ask, because I know everyone's going to ask, maybe if you have a forecast on pricing for gold, but where can people go to find out more information of what you just recently talked about? And then also, where can they go to potentially learn more about GoldMining Incorporated?
Yeah, and the forecasters are out there. I hear forecasts $2,500, $3,000 per ounce. I mean, I'm bullish on the price of gold. I won't hang my hat on a specific number, but I'm bullish on it. I think there's room to grow from where we are today, and the fundamentals are there for it. The market sentiment will be there for it. So I think it's a very positive trend and a positive indicator that the price has some upside to go. As for getting more information on GoldMining Inc., very easy to do. Our website, www.goldmining.com. There's a newsletter one can subscribe to on there with one click of a button. And we talked about the ticker symbols, GLDG on the NYSE, and even easier to remember, it's GOLD Gold on the Toronto Stock Exchange.
Awesome. Well, Alistair, thank you for your time and coming here and educating the audience. It's always good to get an insider's look. We really appreciate it. Thank you.
Pleasure to be here. Thanks for having me.